Imagine you live on a street where it only rains once a year. But when it does, it's a colossal downpour. No one knows exactly which day this will happen, or whose house will be right under the storm cloud. Now, buying a giant, super strong, house-sized umbrella is incredibly expensive for just one person. Most people couldn't afford it. So what if you and all your neighbors made a pact? Everyone agrees to chip in a small, manageable amount of money, let's say $10, into a community pot every month. This creates a large shared fund, big enough to buy one of those amazing house-sized umbrellas whenever it's needed. When that unpredictable rainy day finally arrives and it starts pouring over, say, Miss Johnson's house, the neighborhood doesn't panic. You all take the money from the community pot, buy the giant umbrella, and hold it over her house, keeping it safe and dry. Miss Johnson is relieved, and everyone else is happy knowing that if the rain cloud had parked over their house instead, the same protection would have been there for them. So, let's put a more formal definition to our umbrella story. Insurance is a financial safety net. It's a contract, a formal agreement you make with an insurance company. In this agreement, you agree to pay a regular, smaller amount of money, and in return, the company promises to give you a large sum of money if something unexpected and bad happens. It's a way of transferring the risk of a major financial loss from yourself to a larger entity, the insurance company, that is equipped to handle it. Think of it like a backup generator for your financial life. You hope you never have to use it, but you're incredibly glad it's there when the power goes out. Let's break down the process of how this all works, step by step, using our neighborhood pact as a guide. First, you decide you need protection for something valuable, like your health or your car. You approach an insurance company, which is like the neighborhood committee managing the umbrella fund. The company assesses your specific situation to determine how risky you are. For car insurance, they might look at your driving record, your age, and the type of car you have. A driver with a history of accidents is like a house built on a floodplain, more likely to need the umbrella, and thus might have to contribute a bit more to the pot. Once the company understands your risk level, they offer you a contract. This contract is the official rulebook for your protection plan. It details exactly what is covered, how much you need to pay, and how the company will help you if something goes wrong. When you agree to this contract and make your first payment, your protection begins. Now let's say the unfortunate event happens. You get into a fender bender, or a pipe bursts in your kitchen. Your next step is to contact the insurance company and tell them what happened. This official request for help is your moment to say, "Hey, I need that umbrella now." The company will then review your situation to make sure it's a type of event that is covered by your agreement. They might send someone out to assess the damage to your car or home to determine the cost of repairs. Finally, after approving your request, the insurance company provides the financial support you need. They will either pay the auto body shop directly, send you a check to cover the cost of home repairs, or pay the hospital for your medical bills, up to the limits outlined in your contract. Insurance comes in many different forms, each designed to protect a specific area of your life. Let's start with 3 of the most common types. First up is health insurance. Think of your body as a highly complex and valuable machine. Like any machine, it can sometimes break down or need maintenance. Health insurance is the protection plan for this machine. When you get sick or injured, the costs for doctor visits, hospital stays, surgery, and medicine can be astronomical. Health insurance steps in to cover a large portion of these bills, ensuring you can get the care you need without facing financial ruin. Next, we have auto insurance. Your car is an essential tool for modern life, but it also represents a significant risk. Every time you get behind the wheel, there's a chance of an accident. Auto insurance protects you from the financial consequences of this. If you cause an accident, it can cover the repairs for the other person's car and their medical bills. It can also cover the cost of repairing or replacing your own car if it's damaged or stolen. Then there's home insurance, which is also often called homeowners or renters insurance. For many people, their home is their single largest investment. Home insurance protects this massive asset from disasters big and small. If a fire, a tornado, or a severe hailstorm damages your house, this insurance provides the money to rebuild or make repairs. It also typically covers the belongings inside your home, like furniture, electronics, and clothing. Each of these insurance types functions on the same core principle we've been exploring. Millions of people pay into their respective pools: the health insurance pool, the auto insurance pool, and the home insurance pool. The money is then used to help those within each group who experience a covered event. Whether it's a sudden diagnosis, a collision on the highway, or a tree falling on your roof, the right kind of insurance acts as a powerful buffer against financial catastrophe. Beyond the big three, there are other important types of insurance designed for different life circumstances. One of the most significant is life insurance. This one is a bit different because it's not for you. It's for the people you leave behind. Life insurance is a contract that pays out a sum of money to your chosen beneficiaries, typically your family, when you pass away. It's a way to provide for your loved ones and ensure their financial stability after you're gone. The payout can be used to replace your lost income, pay off debts like a mortgage, cover funeral expenses, or fund a child's college education. Think of life insurance as a final act of care, a financial safety net you leave for your family. Another crucial category is disability insurance. Many people insure their car and their house, but they forget to insure their most valuable asset, their ability to earn an income. What would happen if you became sick or injured and couldn't work for months or even years? Disability insurance is designed for this exact scenario. It provides you with a portion of your regular income while you are unable to work. The world of insurance is vast, with specialized policies for almost any imaginable risk. There's renter's insurance for those who don't own their home, travel insurance for when you're on vacation, and even pet insurance to help cover unexpected vet bills for our furry family members. Businesses use many kinds of insurance to protect against everything from property damage to lawsuits. To navigate the world of insurance, you really need to understand its language. So, let's demystify 4 of the most important terms. The first is premium. This is the regular payment you make to the insurance company to keep your coverage active. Think of it as your membership fee for the Neighborhood Umbrella Pact. You might pay it monthly, quarterly, or annually. The amount of your premium is based on your risk level. A higher risk generally means a higher premium. Next up is the policy. The policy is the formal contract between you and the insurance company. This document is the rule book that spells out everything in detail. It specifies what events or perils are covered, what is excluded, how much the company will pay out, the coverage limits, and all the terms and conditions of your agreement. It is incredibly important to read and understand your policy so you know exactly what protection you have. Then we have risk. In the insurance world, risk is the chance or probability that something bad will happen that is covered by the policy, leading to a loss. Finally, there's the claim. A claim is your formal request to the insurance company for payment after a covered event has occurred. When you file a claim, you are officially activating your policy and asking for the financial help you've been paying for. Let's move from theory to reality and look at how insurance works in everyday life. Consider Sarah, a 30-year-old graphic designer who pays about $200 a month for her auto insurance premium. One evening, while driving home, another car runs a red light and crashes into her. Her car is badly damaged and she suffers a broken arm. The cost to repair her car is $9,000, and her medical bills total $6,000. Without insurance, she would be facing a sudden, unexpected bill of $15,000, which could wipe out her savings. Because Sarah has auto and health insurance, her story has a much better ending. She files a claim with her auto insurance company. After she pays her $500 deductible, her insurance covers the remaining $8,500. Now let's look at the Miller family. They've been paying their homeowner's insurance premium, about $100 per month for 10 years. One night, a faulty wire in their kitchen sparks a fire. Thankfully, everyone gets out safely, but the fire causes extensive damage throughout the house. The estimate comes to a staggering $75,000. On top of that, they need temporary housing costing an additional $4,000. This is precisely what home insurance is designed for. The Millers file a claim with their insurance provider. Their policy covers the full $75,000 and also includes loss of use coverage. So, why is insurance so important for ordinary people? It's because it provides a bridge over the unexpected financial valleys of life. No one can predict the future. We can't know when an accident will happen, when illness will strike, or when a storm will hit. These events are a natural part of our world. What we can control, however, is our preparedness. Insurance is the ultimate tool of preparation. It allows us to transform a potential catastrophe that we can't afford into a predictable, manageable expense, the premium that we can budget for. Insurance also fosters a sense of personal responsibility and foresight. By choosing to get insured, you are taking a proactive step to protect not only yourself, but also your family and even your community. When you have liability coverage on your auto or home insurance, you are ensuring that if you accidentally cause harm or damage to someone else, you have the means to make it right. Furthermore, this system promotes economic growth and stability on a grand scale. Imagine a world without insurance. Banks would be far less willing to lend money for mortgages if a single fire could destroy the asset they were financing. Entrepreneurs would be hesitant to start new businesses if one lawsuit could bankrupt them. We would live in a much more cautious, risk-averse world with far less innovation and progress. Insurance provides the confidence needed for individuals and companies to take calculated risks, invest in the future, and build wealth, knowing that a safety net is in place to catch them if they fall. Ultimately, insurance is about empowerment. It empowers you to take control of your financial future by mitigating the risks you cannot eliminate. It frees up your mental energy from the constant what-if worries, allowing you to focus on your goals, your family, and your passions. We've been on quite a journey, from a simple neighborhood umbrella pact to the complex mechanics of the global insurance industry. But the core idea has remained simple and powerful throughout. Insurance is a collective agreement to share risk, a system where we all chip in a little so that no one has to face a devastating financial blow alone. Think about insurance not as a bill or an expense, but as an investment in your own peace of mind. It's a personal force field of preparedness that you power up with your regular premiums. Whether it's health, auto, home, or life insurance, each policy is a specialized shield designed to protect a vital part of your world. By understanding the key terms, premium, policy, claim, and risk, you are no longer just a spectator. You are an informed participant, capable of making smart decisions to protect yourself and your loved ones from financial uncertainty. I encourage you to look at your own life through this lens of risk and protection. What are your most valuable assets? Taking the time to assess your needs and ensure you have the right coverage is one of the most responsible and caring things you can do. So, go forth with this new understanding. Don't be intimidated by the jargon or the fine print. You now know that at its core, insurance is a simple, brilliant idea that makes all of our lives more secure. It's a testament to what we can achieve when we work together. By embracing it, you are not just buying a product. You are joining the largest, most successful neighborhood pact in the world. You are building a more resilient future for yourself, one small, predictable premium at a time. And that is a truly powerful thing.